What's up, crypto folks? I'm Crypto Summary Doge. I'm that dog that every family dreams about, because I can share with you some crypto tips and tricks that will help you on your investing journey. Can your dog do that? I don't think so. Much tips, much tricks, wow profits. Today I'll tell you 5 lessons from 2 top crypto investors. And trust my dog bark, this is going to be as true as it can be. Dog and roll, let's go. Let's start with Richard Chen, who is the general partner and prolific investor for One Confirmation, a company that supports exceptional founders fueling the decentralization of the web and society. One Confirmation has made investments in big projects in companies like OpenSea, Polkadot, and some more. Let's hop into the first lesson. Very simple rule, just buy Ethereum. Let me explain why. It's because according to Richard, it's the investment where you are able to buy and leave it to chill and just forget about it. As you probably heard already, Ethereum is well known for being the second largest crypto by the market cap. It has reached almost $350 billion and possibly it will continue to rise. The reasons for growth are quite basic. Ethereum enables the deployment of various decentralized applications, smart contracts and NFTs. This legitimate project also aims that these features would be built without any fraud, control, downtime or third-party participation. So that's very cool. Bouncing up onto the next key point, that Richard kindly shared with crypto fans like me, and you, and this time it's named dialectics. What the woof is that, you ask? The strange word describes opposite circumstances that could happen despite their extreme differences. In the crypto world, there is such an extreme situation, where you can gain high rewards on a very early stage, and the opposite, a very late stage where high rewards are possible as well. Being early in the project enables you to buy crypto at a very low price with a very high risk, but when the project lifts off, you generate very high profits from it. Comparing to a project which is older and already had its rise, you would say you're too late for investing in it. Nevertheless, being in a very late situation, you can also see the best options to invest if you look closely. Of course, the price will be much higher compared to the new projects, but you can profit greatly. One of the examples is OpenSea, the largest NFT marketplace today. Back in 2021 January its valuation was $100 million, which then it seemed a lot for a company like this. But, in the retrospect it was an amazing investment, because in 2022 OpenSea's worth surged to more than $10 billion, by doing the math we can see it's multiplied 100 times more. Great profits. What's next that Richard Chen has on the table for us? Third lesson sounds like this. Ask the founder to tell of its idea maze. And it's a very fair question, because there are so many developers who work with similar crypto ideas or on similar projects. But how do you pick the right one then? Idea Maze can assist us here, because it shows us how a developer thought about his project all the way through. Answering questions like how he will make it real success from the very start to the very end? Or how will he manage to overcome all the challenges along the way? In simple words, Idea Maze is the roadmap of the developer. Basically, utilizing Idea Maze while researching can help you find shallow and narrow-thinking copycat developers, who don't have their own ideas, and discover true founders, who are fully breathing with their projects in their space, while going through their thought-out process to success. Many great lessons from Sir Richard, much respect for such info. Moving on, I'm really excited to tell you about another investor, Mark Andreessen, and what he has to tell. Mark Andreessen is co-founder and general partner of Andreessen Horowitz, a private American venture capital firm which invests both in early-stage startups and established companies. That is purely great. Mark has 2 tips prepared for us, so let's bounce to the first one, which is, don't put all your eggs into one basket. Or I would say, don't put all the bones in one place. Bright words, Mark. It is very important to invest wisely and don't put all your money only in one project. It is purely because, who knows, maybe beneath this project bad guys are hiding who just want your money for themselves. So just in case of such risk factors, it is always better to divide your investments to more than a few projects. Even if one of your investments is causing money loss for you, the other projects you have invested in will still generate you profit. They are like backup plans for your losses. Now I'm curious about the second advice of Mark Andreessen, so let's go and find out. The last lesson for today sounds like this: you can make a mistake by not making an investment. At first it can sound a little bit confusing, but hey, hear him out. You can actually fail by not investing in good and promising projects. Hearing about a new crypto project that is potentially successful, but somehow you choose not to trust this information and you decide not to risk investing in it. What happens is that later, when prices skyrocketed, investors made 30 times more in profits and made you realize what potential profits you had just lost. Well, at least my Doge heart would hurt real bad. Wait, what? No, I can't feel anything, cause my investments are made by my amazing doggy Sniff. Packing it up. That's all from me today. I hope you'll be as cool as me and will listen to those 5 lessons from investors before investing yourself. Hi paw, and see you in the next Crypto Tips and Tricks series. Bye.